and crypto. Today, we have two incredibly special and exciting guests with us. We have Sara Adami-Johnson, all the way in Canada, and we have Adilah Holivay, all the way in Texas. So, I'm not going to take too long with the introductions. I'm going to hand over to the ladies to introduce themselves, and we're going to start off with the show. Sarah?
Fantastic. Thank you so much, Brian. I'm so delighted to be here and, be the first interviewer of the podcast series. This is fantastic. Kudos to yourself for everything that you do in this space. It's really humbling and great. I'm really honored to be here and with Adila as well.
Thank
So
you.
who am I? Like I'm asking that every day. What do I do? Who am I? So my name is Sara Johnson. I do work for RBC Family Office. I'm a high net worth planner. I deal with international estate, art, and digital assets. My OG, the initial block for me in blockchain was really going back to when I was a training lawyer at the Dutch Central Bank. We were looking at blockchain because it did start back in 1996. So I wasn't there then, but just right after. We were looking at the digital euro. It seems like the time of today's are really repeating history in so many things, and the digitalization or tokenization of real assets and fiat currency into the new realm of blockchain with maybe the assistance of agentic AI is really important. Well, then back then it wasn't sexy at all, and it was really one of those, oh, you are the lawyer that deals with math. Okay, like no comment on that. So today, though, has been very pertinent because not only from a legislative side of things, has technology comes first and legislation come next. Adila she's probably really agreeing with me. But it is a matter of really catching up and understanding, and try for the legislators to understand what these assets are and what are the dynamics and complexities that they bring to old law and to what we deal with, to old principles, and how do they fit together and how do they fit within our lives. Specifically in my role as a planner, I deal with the living because there is a time where it's too late to plan, and that's when you're dead. So I deal with the problems of the living that may encounter with this new technology. So from an estate perspective, from a family law perspective, for example, they're having a divorce, and we have to rejiggle the financial plan for that and the estate plan. They might have children that are now influencers, or they're crypto traders, or they're traders themselves, or they might have land in the metaverse and they want to rent it out. They want to stake that NFTs. So it seems like our realities, our properties are really changing in their nature, but also our interest and what we pay attention to.
Right.
So that's my little intro, and now I'll pass it to Adila.
Thank you, Sarah. Adila,
Well, I just want to thank you both again for having me on the show. Thank you, Brian, for giving me the opportunity to talk
big up
about
yourself.
absolutely what we do in this space. And like Sarah's saying, the work is so important. And unfortunately, we're building technology, but it's an afterthought about how we should manage it, and that's goes into my intro. I so my name is Adilah Holivay, and I work as a digital assets manager, as you would say broadly. Um, my background is in financial services. And what that means is that I've had years of financial service experience working on behalf of insurance firms, banks, big four firms. And what I did is I catapulted myself into this blockchain technology ecosystem because I knew that this was the future. This is the future of how we're going to uh, store our data, and this is the future of how we're going to basically utilize it for transactions. So, in knowing that, I made sure that I put myself in the proper position as far as educating and also getting into communities because fortunately enough, blockchain technology is about being a part of a lot of different communities and being a part of uh, these communities. You understand and you learn, how blockchain works. Being in a community is how you utilize this system. And for that matter, when things were rolled out, about different types of they call these in the wealth management space unique assets, right? Kind of figuring out how to manage these unique assets. So that's where my company came in, working on behalf of DNA Legacy Blockchain Brokerages. That's my company. And what I do at that company is I do wallet management services end to end, from the point of managing the portfolio to the point of actually helping you file your taxes, uh,
Right.
audits. Before you start a DAO, you need to understand the proper structure that you should have, so that DAO can have a seed that will grow when you plant it. For that matter, all your digital assets when you're investing, not so much of investment advice, but now that you've invested, what do you do next? How do you
Right.
plan for the next steps of your life? So this is what DNA Legacy Blockchain does. And my passion is helping regular people, those influencers who've came up on that $1 million enterprise, manage those assets. And that's a big gap that we have in this country today. We have super ultra rich, and we have people who are working poor, as I would say. And now there's a way to monetize for both classes. You can invest in some of these coins at the bottom, and you
Right.
can hold them to the top. Or like if you're in the top asset class, well, then you will be able to learn how to diversify your investment so that when you do die, it can actually go to somebody rather than back to the firm or the
All right.
fund. So that's the kind of work that I like to do.
All right, cool. Thanks, Adilah. So now we're going to start proper, and we have a lot of unpacking to do. Now, Sarah, we're going to throw it over to you. Like, what's all the verbiage, terminology we hear about? Blockchain, DAOs, NFTs, crypto, metaverse. Like, there's so many things to unpack. So, do you just want to take us through one by one?
Yeah, for sure. Yeah, you're right. There is a lot of jargon, and the jargon actually gets worse and worse as you get into it. And it changes. Like I suffer of FOMO every day when I wake up, and Brian, you know it. We're on LinkedIn trying to look and catch up on what's the latest, and what new edicts do we have to deal with. So I would start, as being a lawyer, I will start from a couple of definitions just to lay the land and level the playing field. So you can have a lot of different digital assets. So generally, there is tangible assets, intangible assets, and what we call it incorporeal assets. So the tangible assets are your computer, your phone device, your Alexa, your Roomba vacuum, right? Those are actual tangible, physical, hardware type of assets. And even if when you think of AI, like as a smart brain, well, the smart brain needs to be inside something, right? Inside a computer. So there is a tangible component, which is the actual device, which generally is governed by the manufacturing terms and condition of that device. Then there is an intangible component, which is really the software. So anything that you could think that lives within the manufactured computer hardware. So your software, your email, your online banking, your credit card, PDF statements, your electronic wills, that's also software. A section, I think, that is distinct from the software per se is blockchain. And why? Because blockchain is a decentralized, distributed, peer-to-peer incorporeal system. It's kind of like the internet on steroids, because there are these protocols that live on multiple computers. So it's not just me dealing with my little computer and my online banking, right? It's me downloading a program that is automatically and at the same time connected with all other computers. right? So in
Right.
itself, it feels more like an incorporeal assets because such as a right, like a copyright or intellectual property right. So in that division, we have the blockchain, which is really the rail, the protocol, the rules of engagement that these that all these tokenized and digital assets live on. Then you have different type of tokens. So we can have fungible tokens, so that you and I can own at the same time, and these could be, think of a house, a cat, a coin, a dollar, a US dollar. Those things have the same value. If I have it, if you have it, they look the same and they can be owned systematically by anyone at any point in time.
Right.
And then we have non-fungible token or non-fungible assets, which are unique, So my specific cat, Milo, there's only one of them, right?
Yeah.
Your specific Mini Cooper with a sticker of, the UK, or a driver license that is specific, that has a specific number. So no fungible token can only be owned and possessed by one specific person at that time, right? And so
Yeah.
they are unique. They have unique properties to themselves. And this token, either fungible, like a currency, like a cryptocurrency, or non-fungible, like an NFT, runs on the blockchain train rail, right? The blockchain is the system, is the framework that allows these assets to be recorded, to subsist, to be exchanged, and to be owned. So the metaverse, you talked about the metaverse. The metaverse is a virtual environment that is superimposed onto a software system in which there are unique tokens. So the NFTs are the way, the structure that allows people to transfer and own assets within the metaverse. The same thing if you have a gaming system. The game itself may have skins, they may have rewards, they may have other assets. And again, NFTs or non-fungible token are the way to own these unique assets within a digital environment. So if you think about it, it's like a layer complex system of unique tokens or digital assets on top of other digital assets, such as the metaverse, a gaming, or a different software. This is why they are complex assets, so to speak. DAOs, you mentioned, or decentralized autonomous organizations, are organization of people that need two things. They need a token, so they need this, unique set of rules, and then they need a Discord account that will allow them to actually interact and to speak to each other. So with a Discord account that unites people and a token that allows them to vote on what the organization doing, we have an assembly of people that participate to an organization. So
Mhm.
DAO, from a legal perspective, DAOs are general partnerships, right? So I am responsible, my next door neighbor is responsible, all our, tokens participate to the same type of organization and partnership. But if we wanted, we could register the DAO, at least in certain states in the United States, and limit our liability. And that in that case is not a DAO, but is a limited, decentralized organization. So we could have a non-profit organization if we just
Yeah.
want to collect assets and do things for non-profits, for the good of the people, for impact, for example. So in that case, it's a DUNA, or a decentralized non-profit organization. So there are different type of organization, but just to, if you can think of it, is a group of people getting together, exchanging information and deciding what to do through a Discord account that vote for that plan through a token. So in that sense is decentralized and and virtual.
Right. Thanks, Sarah. Adilah, you want to chime in on that?
Impeccable explanation, Sarah. And I would say for the layman people out there who are trying to reconstruct their mind to think about how we're utilizing this ecosystem. If you consider blockchain a place where you store the data, and you consider the DAO, the type of way that you do business with the data that you're utilizing, and the crypto and the NFTs, those are the asset classes in this ecosystem. And in the metaverse would be the land in which it takes place.
I love it. I
That,
love it. Yeah, it's great. It's
right?
absolutely correct. Yeah, because I mean, if you really think about it, a blockchain, it is really just the ledger, right? It's
Right.
the structure that allows you to record and monitor transactions of virtual tokens, right? And these tokens could be fungible, so it could be a cryptocurrency such as ETH. We want
Yeah.
to say Bitcoin, Bitcoin, stable coin, right?
Mm-hmm.
Yeah.
So again, those are the assets that are getting recorded onto the blockchain, which is that ledger that shows, okay, so and so has 10 Bitcoin that were passed to XYZ in that date at that time for and at that value. That's the recording mechanism of the blockchain. So the blockchain is really the ledger, the financial ledger that allows people to see and these transactions between parties forever, because the memorialization, at least in theory, the memorialization of that coin block, right,
Mhm.
that data, as you were talking about, Adilah, it's there. And it is dispersed. So not only it's on my computer, but it's on everybody's computer that is connected within the protocol. So if you have downloaded the Bitcoin blockchain protocol, you also can see all those transactions. And as soon as there is a new transaction, that ledger will be automatically updated. So that's what the blockchain is. That's why I call it the rail. It's the
Mhm.
system, the framework upon which all those assets get transacted, right?
Right.
And if it is an NFT, you need not Bitcoin, because Bitcoin does not have the ability of holding NFTs, because NFTs are for unique assets and the Bitcoins are non-unique. They're fungible tokens. Then you need an Ethereum-like protocol, right? That
Mhm.
allows for dApps, that allows for smart contract. And I generally tell people, as soon as you hear the word smart contract, you're thinking smart as self-executing and contract as a program. The
Mhm.
contract is a program that is self-executing. So it's a whole bunch of lines of code that have, if this happens, if I get paid my 10 ETH, you're gonna own my CryptoPunk, right?
Mhm.
So, prices have gone down. So that's what happens. So if and that actually happens, then my program gets deployed and the information gets transacted. So that's what an NFT is, but that's why you need specific rails, specific blockchain to sustain specific assets.
Sarah, quick question. So I think probably was it 2 years, 3 years ago, we had the NFT bubble, and then we had the DeFi bubble. Like we've had so many trends coming back and forth. But if I were a lay user right now, like on the streets, a lay ordinary Joe, I would ask you, so how do I make money from this? How do I monetize? Like, you know, because as an ordinary person, you hear crypto and you're thinking like gambling or
Mhm.
get rich quick scheme. From the courses we've done last season, the students kept asking, so how do we make money from this? You know, so for a layperson, why is this important for them essentially?
Yeah.
Yeah.
Yeah, because you could treat, so just I'm trying to unpack what you just said. So you can treat this new technology as an alternative investment, a little bit what Adilah was saying, so knowing your risk. So I would say that playing within the ecosystem of cryptocurrencies, the risk that you are getting is, first of all, your knowledge risk. because the less you understand the technology, the higher the risk of you putting up money for it, right?
Yes.
And I'm glad you agree, because it goes to your hygiene for asset management, right? So if you do not even understand what a wallet is, and all of a sudden you just want Bitcoin, right? So you have to be able to distinguish and be very honest with yourself regarding what is it that you know, what is it that you understand about the technology, even before you get to play within the ecosystem, because there are different ways you can invest. So you can invest directly by buying into a cryptocurrency, for example, whatever your art the desire, or you can go through the regular financial channel, go to your own broker and say, hey, buy me an NFT, or sorry, buy me an ETF or a mutual fund that is out there in the regular world that invest into these things. And this is kind of the evolution of the DeFi into CeFi, or into traditional banking and traditional investments. We have a way to participate to it depending on our knowledge, and you have to take the risk that you want to take. That's number one. So know thyself. Number two, it's really difficult to understand which one. So what can you afford? Have a budget within your knowledge. Pick up some money that you would take to the casino and stick within your budget, right? Because the less you understand, if you're a poker player that won a couple of awards, well, then that your risk level is much higher because your knowledge is much higher, and also the ability to spend within this ecosystem is much higher. But if you're just starting out, have a very specific budget, knowing that you could lose it. I mean, you could lose anything by investing into the stock exchange as we speak. There is no guarantee of any type of return, not even in the bond market, right? Even in the securities. So stick within your budget, and then try to educate yourself. And do not buy on what is going to the moon. Don't buy or don't invest on just the latest tweets or X posting that you might see, right? Try to do some due diligence. Try to look at the functionality, who's the group of people behind the protocol. Just try to are you aligned philosophically? There is a very specific sovereignty philosophy behind Bitcoin. The people that understand and invest in Bitcoin are aligned philosophically, and I would say politically almost, to a certain ethos, so a certain zeitgeist. Are those value, do you recognize yourself in those values? Or do you just want to diversify, right? You have real estate, you have your stock market stuff, you have your bonds, you have, your gold resources, and now you think, okay, I should put something within my pie towards cryptocurrency. Is that wrong? No. But the way that you go about it, could be wrong if you're just very cavalier without doing homework.
Sarah, before I pass the mic over to Adilah,
I know she has something to say. I can
I
see
know
it.
she
I can
has
see
something to
it.
say. But before we move away from the Bitcoin conversation, I just want us to make a quick reflection. When the white paper was drafted rather, by Satoshi, the essence of Bitcoin was to enable peer-to-peer transactions. But it's morphed from what it was supposed to be to what it is today. Where was the point of departure, and what is Bitcoin actually doing today?
Yeah. Well, you could. It depends. So there are, it depends really who you ask, because there are people, the purist of Bitcoin, that really feel that, we should just stick with the original protocol. The original protocol came out in 2008, right? At the eve of the biggest, since 1929, meltdown of the financial system, of the traditional financial rails. And it was supposed to be an alternative, to that system that was seen as corrupt, as vulnerable, as literally inaccessible in the way that it was organized, in the way that it meant, and that was hurting real people, right? A lot of people lost a lot of money. And so Satoshi Nakamoto's original philosophy was, take it upon yourself, become your own state, become your own central bank, make your own decentralized system for payments and for exchanging value, right? Have your own coin and pay basically with your values. And so the peer-to-peer philosophy was there to basically, sediment that feeling, to the point that within the first block of the Bitcoin, blockchain, there is that picture of the financial meltdown, of the paper that came down, that was published that day, in which, here it is, the world is ending, basically the financial world is ending, and a lot of the big banks failed because of this internal corruption. Now, I would say that with the coming on into this new century, so with the 2020s, I would say, and the growing in popularity of Bitcoin, there has been traditional players and governments that are looking at this system as, well, this could save us all, basically, from the system, and we want a piece of it, right? We want to participate, we want to pay. And so with the financialization of and the coming into the fold and of regular investors, investment of regular FIs, that's where I think there has been that shift, and even government taking on Bitcoin as their own parallel system for transferring payments. We've seen it in many different states, Salvador to start, right? Yeah. And the idea was really to try to figure out, is there a way where people can just communicate directly without intermediaries? This is the peer-to-peer, without a bank, without a traditional broker or a bank or a system, that can they exchange value within themselves, right? Kind of in a barter system, but digital, right? And so a lot of states where there is a higher, percentage of maybe corruption, maybe theft, maybe whatever, they migrated into, paradoxically, into this DeFi system to allow people, to bypass that that intermediary layer. So yeah, I think the mid, after 2015, maybe after the coming to age of Ethereum, the explosion, I would say, of interest into alternatives that are digital alternatives, there has been this shift,
Thanks, Sarah. Adilah, now to you. I know you had some comments to chime in on Sarah's previous response.
Well, I was just going to piggyback on what Sarah was saying about investments into those asset classes. The risk also includes being able to, number one, file your taxes appropriately, being able to keep up with the mass amount of crypto that you're acquiring in those wallets. And unfortunately, a lot of the exchanges, they don't help you manage your wallet. They'll let you buy it, but they don't help you manage your wallet, and they don't, and that's a risk. And then also, when you are trading, the risk could be trading with people who are involved with illicit activities, whereas your coins can get absconded. And just kind of talking about what you're speaking about here, as far as ensuring that basically whatever you intend on investing in, yes, you have to make sure you're properly educated. You have to make sure you're not also in a scam, because they have all of these get rich quick schemes. If it seems too good to be true, most likely it is too good to be true. Talk to a professional in the space before you make that investment. Not that they're going to give you investment advice, but basically they're going to be able to tell you how to go about it. We throw around a lot of terms in this space, white paper and things of that nature. Do they really understand what that means? Well, simply it means for you to really read about the project. If the project doesn't have a white paper, maybe you shouldn't be investing in it. You know, these are these are some things, you know, because in a decentralized world, you just can't call them and track them down.
Yeah.
Yeah.
And even if it
Right?
does have a white paper, Adilah, I think you really have to scrutinize it, because some
You
of them
gotta
have really
scrutinize
good
it.
papers and websites and all, you know.
Yeah.
Yeah,
Yeah.
you better make sure wherever you're investing it's a responsible vehicle, because
Yeah.
Telegram isn't gonna, you know, you can close that Telegram and open up a new one, you know, so it's not, you know, is the feasible lines of communication is really open for you to be able to communicate about your concerns about the investment you're getting ready to make. And
Right.
then speaking about too, we were just speaking about, we were talking about basically how to not just manage our portfolios, but then also how to make sure that, you know, what we're doing is in a legal ramification. Sarah, she's like all in one. You're getting a wealth management advisor, you're getting a legal, you're getting everything. And that's what you have to be now, right? You have to be a little bit of everything to be able to grasp some of this information. And you know, you got unicorns like Sarah out here, and you know, they're helping people understand, you know, what they're investing in, you know, but there's not many. That's why it's a unicorn. There's not many people out here that are really able
Yeah.
to understand. That's why plugging into networks like Blockchain Lex Group is very important for people who are trying to invest, for people who are trying to understand digital asset classes such as cryptocurrency and NFTs, because we're bringing information like this that is vital. It's vital for this economy. The people who are now living in this economy, getting ready to inherit this ecosystem, uh, they're not educated on it. They don't really understand how to get educated on it either. So
Yeah.
that's why this network is vital.
Thanks, Adilah. And Adilah, you've just literally put us in where in the place we wanted to segue into. Now, Sarah, in terms of digital assets, you've clearly defined the distinctions of the various asset categories, and now we're aware, we understand we have digital assets, and we want to get into portfolio management and diversification. So there's a few things we want to look at: compliance, tax, custody, succession. How do they work together? How do you self-regulate? And how do you comply with the local regulations within your jurisdiction? So I know that's a bit of a
Yeah.
mouthful, but Sarah, you can
No,
take us.
yeah, no. It's yeah, and you're absolutely correct to identify which jurisdiction are we talking about, because there is no, even though this, and this is the great paradox of blockchain is a distributed, not only distributed through the computer but decentralized. So there is not one central bank, there is not one place. Even Bitcoin, there is not one thing, there is one protocol, but it is living on many different computers. So there is this diffusion of power and diffusion of geography, right? So it's decentralized and distributed technology. But to your point, each one of us, the human users, are actually part of a very specific jurisdictional system. You may be a tax resident and a domicile in a specific jurisdiction. And for what matters to our day in, day out life is really the country where you live. So, for example, in Canada and here in British Columbia, Bitcoin or cryptocurrencies are considered commodities. If you just go across the border, not very far away from I am, and you ended up in Washington State, in the US, that's considered smart property. It's considered property. The taxing government agency is not any longer the Canadian revenue, but it's the IRS, it's the internal US revenue. And so there are different players that are connected and different rules depending on literally where you are on that borderline. right? And so this is for Africa, this is for Europe. The beautiful thing about Europe is that for the European countries, there is unified or harmonized legislation that then gets implemented at the country level. So there is a little bit of a more decentralized view of legislation and a more comprehensive and harmonized take. But for every other country, starting from the UK now, which is out, Canada and the US and Latin America, you see a patchwork of laws. And to your point, while we are alive, there are different things that could happen to us. So we could be alive and growing our portfolios. So in that case, that we will have to pay taxes as we go, and that is income taxation. And to the great point that Adilah made, not just because these are virtual assets, that doesn't mean that there is virtual non-taxation. Like that idea of owning these assets and not having to pay tax on what you made on this transaction is long gone. That train has departed, I would say, yeah, 20 years ago. So you have to kind of come to this moment of realization that if you own it or when you get into it, that initial transaction may be a taxable event, because initially you have to transfer your fiat currency, so whatever it is that you're using, UK pounds, American dollars, Canadian dollars, into something else, right? And that would be your cost base. And whatever happens in the world of the cryptocurrency, let's say you're exchanging it for another cryptocurrency, you're staking it, you are now lending it out. All of those transactions could lead to taxation, and it could be capital gains, it could be full income tax, depending, are you just doing it as a hobby, or are you in the business of trading cryptocurrency, right? Are you receiving drops that are free drops with value, or that are vesting, in the future? So it's very complex, but it is an inevitability of life to you kind of, having to pay for the right to play and for the growth of your portfolio in this environment. And then to your point that, you were saying compliance, generally the way that we buy these assets is through a decentralized exchange. So
Yes.
we use a custodian or an intermediary to do that. They might have their own terms and conditions. Even the fact that they can exist themselves in a specific state will determine that they will have to be registered, for example, with the Canadian government or the US government. And depending on which cryptocurrencies they sell, or they trade, or they give up, they might have to follow certain specific rules, right? They may be creators of the currency themselves, right? They may be also, and there will be a juxtaposition of different rules on these assets. But you might have your own wallet, and I know Adilah can speak very eloquently about that side of things, and be totally decentralized. You're completely detached. You're a self-custody person. But what are the risks that come to in play to that? Well, the fact that you can lose it, right? It literally looks like a USB. So what if you lose it? The fact that now that you have your USB, you have to access it, and there is a password to do that, which is called a private key. This technology is very robust because it's governed by cryptography, right? So we have a system of a double key system. And so you have to keep track of all of these things. So the next layer is, you live in a jurisdiction, you have compliance, regarding the jurisdiction that you live in, you probably have tax, but you also have to have great hygiene of self-management and inventory for this space. So it's a twofold conversation.
Thank you very much, Sarah. Adilah, I know wallet hygiene is your area. So you want to bring out your scrubber and come and tell us about this?
Let's clean it all up. So earlier we talked about Satoshi and his vision for this type of digital assets, right? I believe his vision, and part of his vision, was for us to be able to have cross-border payments. We were able to pay for things as simple as a pizza, or just make transactions, essentially, right?
Yes.
Now we have a robust systems in place that really are monopolizing on the flexibility of this currency. And on top of that, we have governments that now see, especially in the United States, they see the vision and they're looking to monopolize on that vision as well for us people here, even in the United States, and for that matter, across globally. So when we think about our wallets and how we're managing them, like she said, you have to be your own fund manager. You have to know how to manage your funds. And this is not just talking about back then we used to balance checkbooks. We don't use checks anymore. These are all digital. And now this is in a private ledger that's end-to-end encrypted. So if you lose your private key, that's it for you.
That's it.
You can try to find a service to help you retrace it, but that's it. There are companies like Global Ledger. It's a company out of Switzerland, a company that I've been in communication with that helps to track and trace assets, especially assets that are absconded. You have the big guys like Chainalysis and TRM Labs that help. But what really happens when, you get locked out of your crypto? You got all this millions. There's people who are digging in landfills to find their to find their hardware.
Yeah, that guy in the UK.
They can get that money. That's it. It's gone. Yeah. That's it. So with that being said, how do we protect our assets, right? And again, we have governments, especially in the United States. I'll speak for the United States. Right now, we have a capital gains increase. We have a capital gains increase on those who have incomes over $1 million. So we understand that there is a wealth inheritance taking place. We have a boomer generation. Those are the check writers. We have a boomer generation that's getting ready to retire. We have influencers overnight. You got 1 million followers, you're getting X, Y, Z money, right? So we have these kids that are coming up and they're not investing in traditional assets. They're mixing it up, those who are learning, but they're really betting on these digital assets. And in order for us to carefully look at how we're managing our wallets, we have to first understand that rules to engagement of wallets and managing those wallets. Number one, keeping track, understanding the sources of from where you're getting your transactions. They have scoring now for you to be able to score your wallets so that you can see if your wallets are are interchanging dirty digital assets. If you are trading with someone or buying from someone who has been tied to terroristic type of thing, it can happen. It's a decentralized network. You can't call these people and say, hey, where you're involved with this. They're not going to tell you. They're going to disappear, right? So, you have to be your own manager of your assets. And that's some of the work that I do, is helping people not only just to identify if, hey, before you make that trade or before you buy that Lamborghini, let's really look at this wallet. And the gift looks good, because you could buy a car with digital assets now. It's simply easily. But before you do this transaction, let's look at this guy, let's look at yours, and let's make sure the money is exchanged appropriately, and let's make sure it follows all the guidelines of compliance. Because unfortunately, since digital assets in the United States is looked at as a property, and you got capital gains taxes increasing, it goes by a cost basis when you get ready to cash it out. Okay. And then one more little fact I learned about: when you die, and if you die with the digital assets, and maybe Sara can attest to this, when you die with your digital assets and you want to give it to your family member, they give it to you off of the market value of today, not when you bought it.
That's right. There's a step up.
Yeah.
So there's a step up.
If you've been holding on to it, right? If you've been holding on to it, you're not going to get the same price value, right? So go ahead and talk about it, Sara. Let them know.
Yeah, that's right. Yeah, no, and that's a really good point. And just to drill down on your thing, if in the IRS, in your system, there's also a default mechanism that looks at, it's called FIFO, first in, first out. So unless you keep really good track of when you bought your token, and you have a very limited amount, I think up to this year, to actually state with which methodology and what token will be traced as, the first in, first out, the FIFO is going to
Yeah.
be applying. And so you may be subject to huge, taxation while you're alive. And to your point, at death, generally, if the digital asset goes through your estate, then it gets a bump up in basis, right? But if it doesn't, because maybe you put it in a irrevocable trust, maybe you've used your capital exemption, like your lifetime gift and estate tax exemption, so you have done some planning beforehand, you have to be very careful, because that original gift passes at the original cost, right? So
Mhm.
there is things that in conversation that are very nuanced, and things that can happen that depending on how you're structuring, are you putting in an LLC, are you putting in a holding company, are you putting it in a trust, are you doing it in a charitable remainder trust, you name it, right? So yeah, all of those things. And for Brian, you talked about family law, that
Yeah.
idea of tracing, like
Yes.
going back to where did that fiat, where is that currency that was exchanged into a digital currency came
Yeah.
from? Was it from a separate account? Was it from a community property account? Was it bought through the labor of the family? Was it a matrimonial property or not? That is absolutely essential in divorce cases, right?
Yeah.
When we're trying to figure out like who owns what, right?
Mhm.
And then trying to figure out if it is a highly volatile asset, what is, how do we do equalization? How do we, decide who keeps the digital asset and who keeps the house in Miami, right?
Yeah.
So or the villa in or the villa in France. So it's a very technical and very complex system that requires a lot of documentation. So as a user, you have to, there is no this is not optional. You have to have your documents ready, you have to keep them up to date, you have to keep track of everything, and you
It's your
always have to think.
responsibility.
Absolutely, absolutely. And always have to think in real fiat, right? In
Yeah.
thinking in Canadian dollars or US dollars or UK pounds, and what that translates to into that onto the current currencies. So yeah,
Sarah,
it could be
just
complex.
clarification. Uh, we're assuming that these are the digital assets that are privately acquired, the Bitcoins, the Ethereums, and the NFTs and all sort of. So where do stable coins sit around this conversation?
Well, stable coins, the real stable coins, there are many different flavors of different stable coins, right? So there are stable coins like Tether and the Circle one that are backed by USD, right? So that means only that their value is pegged to the value of the US dollars. Now, the
Yeah.
value of the US dollars, if you're not a US person, could go up and down.
Yeah.
So if as a Canadian, I decide to invest in a stable coin that is backed by US dollars, I have two separate currencies that I have to deal with. The value of the stable coin to the Canadian dollars and the value of the stable coin through the USD, right? And
Yeah.
so and that separate exposure. So now the stable coin could be backed by something else. It could be
Yeah.
backed by an algorithm, something completely mathematical based on maybe, a certain software.
Hmm.
It could be backed by a commodity like the price of oranges or gold or
Yeah.
silver. So the idea is that the stable coin per se is just a fungible token, and it's different than the fiat currency. And
Yeah.
this is the other distinction, is what is the difference between a stable coin in US dollars, for example, and a digital token of US digitized dollars? Those are two separate things, right?
Yeah.
The digital token is just a digitized version of your deposit, of your US dollar deposits that you have in your bank account. It stays within a centralized system, right?
Yeah.
And it keeps the money work within the regular finance, the traditional finance. Stablecoin takes money from your deposit account and puts it into the incorporeal world of blockchain, which is detached from anything that has to do with regular finance. So for example, if the central bank decides to raise interest rates or to lower interest rates, that will have an impact on your deposit at the bank, right? How much the bank is going to charge you on your deposit or is going to charge you on your mortgages. If you have stable coins, the fact that interest rates in this world go up and down, it's completely detached from the value of the stable coins. It may have an impact on the value of the US dollars. So it may devalue the value of the US dollars. Let's say the American government start printing a lot of US dollars, so start printing money. Well, each US dollar may go through a devaluation, right? Because there's more supply. So now the value that the stable coin, is connected to may have a differential, but the stable coin itself could very well trade at a different level, right? And so it will require, for example, the stablecoin issuer to buy more of the reserves, right, to represent the new value of the stablecoin, or to sell. So it's very complex system dynamic here, but it's a finance. It's almost like a separate finance and separate calculation that happens at the stablecoin value. And there is not just one stablecoin; there are many different ones.
Adilah, you want to chime in something? Because I wanted to
Yes.
throw in something in there to ask
Oh,
now, where do the CBDCs sit as well?
I like to just
Yeah.
say that I look at stable coins as a digital copy of of a of a dollar. For us in the United States, it's a digital copy of a dollar. And like you said, depending on how much the allowed amount that we're going to reserve, it's pegged to that stable coin. That's the amount that we're willing to liquidate and sell. But with that being said, it holds its own value as long as as long as it's pegged to the dollar. And I mean, a lot of people are trading a lot of USDC coins because they know that I can quickly turn this into a fiat uh, monetary purpose if I want.
Right.
But if that monetary purpose goes away for that actual, because that's what stable coins are for. As good as the dollar is, this is as good as the coin is. For some reason, if the dollar goes away and we don't have the United States dollar, then we're still standing on the OGs. We're standing on the Bitcoin. We're standing on Ethereum because we don't like, for example, if you have a nation whose dollar falls, you have many nations whose dollar is at risk. Does it make sense to have a stable coin? No, because your dollar doesn't even mean anything right now. And it's just like any country that doesn't have a value really tied to the dollar. Then you have an inflation situation, but you still have those OG coins that you can move money to, that moves money through the rest of the world. And I believe that is the bigger take too on the digital assets, that we're kind of down the weeds a little bit with the stable coins, because of course, places like in the United States, we want to stand up and want to say, yeah, we got these stable coins are for sale, and we want to get as many out there as possible so we can have that digital reserve. But if for some reason we lose our dollar, then what are we really going to have to trade?
Yeah, and this is really important, because to Brian's point, what's the difference then with the centralized coin? Well, the CDBD, like the central bank decentralized token, it's really the fiat being digitized. So it's not a relationship that you create between a cryptocurrency and a dollar or gold or whatever it is that it's backing up its value. It's the dollar itself, and that's the difference, because the CBDC, it's still part of the CFI, of the centralized digital. So you could have a centralized, dominated, non-open, right, non-distributed coin, which is representing the dollar, under the benefit of the central bank and distributed through the commercial banks, for example. And then you can have a stable coin that is represented or is backed by, the US dollars, but it's in itself a separate token, right? It goes in the it plays in the on the pipes of the decentralized world. So yeah, that is the main difference.
Okay. So as we start cooling down, winding up, I'm going to ask
Yes.
a multi-part question. So
Is this a fire? Fire answer.
yeah.
Right around.
So
Fire
how
round.
do digital assets interact with AI? I just had to shoehorn AI in this because to an extent there's kind of some interaction between these two landscapes. And then the ultimate wind down question is, where is regulatory currently situated? Where is it going to? And ultimately, what is the future, including the ordinary Joe, in terms of consumer protection looking like? In actually, crypto moves too fast. So let's not say in the next few years. How does it look in the next 6 months, up until January? What are we looking at?
Yeah.
Hmm.
So to your first okay, so the first question is difficult, right?
Mhm.
Because AI, we tend to think of AI as the language model, right? So the LLM and the bots that really are there, they simulate the way that we talk, they answer back to us in our style. They're kind of like an encyclopedia on steroids, right? They help us to do research and things. Whether AI in general and algorithmic, smart algorithmic in that sense can help with, research, DNA research, cancer research. It's just basically a way to retrieve and process data, large amount of data,
Mhm.
fast, in a fast way. So it's having multiple brains all attached to each other that can retrieve, that can be fed data and retrieve data and answer back to us using our own language. So using a human type of language. So how does that interact with blockchain? Well, in this new world of agentic system where you could have your own personal assistant, but now it's in the form of an avatar, they could become your traders, right? Also, algorithmic trading system that constantly trade or look for opportunity of arbitrage between trading different cryptocurrencies. So you can look at it as a business model. You can look at as a user-friendly model. Or you can use it as a depository so that whatever transaction happens that get fixed within the blockchain, it's also memorized and downloaded into a data system that is fed to an algorithm that could retrieve it. So, the global ledger, the link of this world, they could use LLMs and they could use artificial intelligence to process forensics, for example, on sourcing and AML purposes and all this other stuff. So that is the way that I see there is an interaction between blockchain and artificial intelligence. To the point of legislation, my prediction is that there's still going to be legislation on VASP, so on regulating the players in the digital ecosystem, so exchanges, who can actually do IPOs, so DAOs or organization that come together to come up with a protocol from a new coin. So ICOs, regulation. we'll probably see more regulation of, now that we have stablecoin regulation in the United States, that's probably spearheading other countries into try to legitimize stablecoin providers. Again, with the view of consumer protection, right? So there's going to be a little bit more seen in the consumer protection under probably privacy, use of user information, and disclosure that are necessary for user to become players into whatever systems. And then, I'm not going to comment on the new regulation that are coming out for AI, because that is very messy. But to stick on digital coins, you probably will see regulation on tokenized deposit coming up. So the banks, the commercial banks made digitized deposit system for their own customers, so that they could implement potentially payments wallet to wallet within the banking system, so not to lose relevance in this space, with or without stablecoin, and probably centralized deposits as well.
Thank you, Sarah. Adilah?
Yeah, I was going to say, so earlier we talked about terms for laymen, how AI, like Sarah said, AI is the processing system, blockchain is the data. Okay, we'll go back over again. AI, processing system, blockchain, data, cryptocurrencies, stable coins is the money utilized in the world, metaverse, and then you have asset classes like NFTs and other digital assets along the lines. So with that being said, that's surely what it is. It's a processing system. And right now we're in the midst of legislation being put on how we're going to utilize AI processing systems to better help us with our digital asset classes and make transactions. With that being said, the Genius Act was passed earlier this year in the summer. A couple months ago in the summer, that basically talks about how we're going to bring in the stable coin tokenomics in this country. And yes, that is going to affect the rest of the world and how they're going to do business with the United States specifically, because so many parts of the world utilize the United States dollar. Mm-hmm. If we didn't have everybody using our dollar, then we could just focus on United States and what we want to do with stablecoin. But fortunately enough, whatever we decide in this country is going to affect many other nations. So that's why this Genius Act is specifically important, especially to us in the digital asset world, because we want to protect our consumers. And if we have, and we talked about a lot of problems with our compliance and wallet management, because at this point, you could just take it for a ride. You could take anyone for a ride, and it'll be years later before they're penalized. I'm talking about the scam. It'll be a year or two later. In recent conversations that we had with Blockchain Lex Group, we learned about how much money needs to be stolen for the IRS to really look at it. And that's millions of dollars, right? So, it shouldn't be that way, but it is. And it's unfortunate that it's that way. But with that being said, I believe that we're going to be utilizing those smart contracts to be able to appropriate those processing systems that we're going to utilize in AI. And we're going to be able to sift through some of that blockchain intelligence, that those data sources, to be able to search and find things that might help us with cases, that might help us get a consumer back their information, or that was stolen on the dark web or something. We might be able to put better context around quantum processing now, because the AI system is what processes the quantum. This big word quantum is kind of like a penny, like what they have processing units. Units for AI needs quantum processing. This is through IBM, some of the technology hubs. You hear about these data centers being built. Well, that's what the data centers are being built for, is to process these quantum AI processors, so that we can move through this information in a smooth way, as fast as the speed of light, you know.
Adilah,
And
there's a big center being built in Texas, isn't it?
yes, it's
Yeah.
huge, huge. Lots of money is going to this, and then we have uh, we have small things like well, it's big, but to me, it's small in the bigger ecosystem. The um, the selling of TikTok. So they already see dollar signs. The whole world sees dollar signs about a company like a TikTok, right? But what is the next level for a company like TikTok? You already have a place where you can monetize and you can sell things. You have a place where people can become millionaires, right? What's the next level for that? Well, the next level would be digital and putting digital assets around that and being able to process more things utilizing AI processing. So this is just one example of a use case that's really going to actually happen. And given all the data centers that are opening globally, they're doing like that to house that quantum data that they're getting ready to roll through.
Thanks, Adilah. Adilah, I'm just going to stay with you to do your quick takeaway, and then Sarah, and then we'll wrap it up because we are now at the top of the hour, and this season we promise to stay within time.
I have to.
Okay, Adilah, your takeaway, and then we go to Sarah for hers.
Well, my takeaway is this:
Mhm.
um, it's it's extremely important to engage in educating yourself. Number one, about this new technology that's getting ready to revamp the way we know how to do business, the way we know how to utilize transactions as we know it. Blockchain Lex Group should be your number one source in making sure that you understand the environment that everyone's getting ready to embark upon. Uh, Utilizing smart management and tools will help you to have a better edge and making sure that you are in compliance, but not just that, that you're really understanding. And companies like my company, DNA Legacy Blockchain Brokerage, helps people put uh, a face and a person in a place rather than communicating with someone on Telegram to help you to better manage your assets. You know, you
Yeah.
got a face. We're still a front facing organization, whereas a lot of these organizations are so digitized, you're not going to be able to find anyone. Just like Blockchain Lex Group, there's a
Adilah, your network went off, but
They need more GPUs in
yeah.
Texas.
Sarah, you
So
want to do your takeaway?
yeah, very, very quickly. I always tell all my clients, and I tell myself, just create a community that is spirited in the same way. Don't be afraid to reach out. I'm very, again, like we started, we are going through full circle here, but I'm very happy that you and I have met, and through you, so many other specialists like Adilah and many others, and it's really like seeing us growing together through the pains of the systematic complexities of an ecosystem like that, and then really try to know thyself. If you are interested in exploring investing and getting more more into it, to what Adilah was saying, just be very systematic, do a self-test knowledge of how much you understand, and you don't need to know how to code to understand the system. You just need to understand the system, and it might take a few tries, but between partnering up with a great community of like-minded people, like spirited people, and then continuously self-check. Don't try to chat GPT your way into this world, because it doesn't work. And with that, I'm really sorry I have to go, but thank
Yeah,
you again
thanks,
so
Sarah. Big up
much.
yourself. We're actually wrapping up. Thank you for your time. You've been a superstar as always.
amazing,
I'll catch you
Sarah.
next time, okay?
So great
Uh,
talking to you
all right,
guys.
bye-bye. So, guys, that was phenomenon for today. Adilah has a book, a resource book that she normally gives away. For those interested in careers in Web3, just reach out to Adilah Holivay on LinkedIn, and she will share the link to her resource. And she will also share it with me, and I'll post it at the end of this session. So for those catching it as a podcast on Spotify, Apple Podcasts, and YouTube as well. You'll see the link. And I'm grateful for your attendance, for those who could make it, and for those who can't make it. I'll catch you on the next one. We are going to be doing this monthly, and we're going to have experts coming through every month. And it is what it is. Just keep your eyes peeled, your ears peeled as well, I think. But we got you. We'll be sending out fresh resources, and we're going to try to make this as fun as we can. Coming up next month, we're coming back with Monster Radio. We're going to be having online radio streaming. We're going to have guest DJs plus. Experts like Adila and Devon, Kinil, Gabi, and everybody just now coming into a more relaxed environment to help people really understand where the future is going. So that's it for today. Big up our sponsors, Blockchain Lex Group, CryptoMondays Caribbean and Africa, Arlene Bradshaw Foundation, DLBB for sure for making it happen, and everybody in the team. Guys, big up yourselves. I'll catch you next month. Bye bye. And this is Brian.
Let the network.